All right, wrong button there, AB. But we have Jeremy Schwartz on CIO at WisdomTree joining us on an interesting Monday here. So let's just, we tried to dance around the political issue. You have a lot of different factors. I know you're very diligent about the markets and your indicators and everything. And you had this kind of political news come out over the weekend, whether anticipated or not. Do you just like throw all that stuff out the window, or do you say, okay, I'm sticking to my models. This is my bait. This is my scenario. How do you do it? How do you approach such a big political upheaval in the markets?
Well, there's how we manage our funds. Most of our ETFs are very rules based and disciplined, and they have a regular rebalancing program. And so, when we rebalance back to dividends or earnings, as we do across many of our indexes, those follow a particular schedule, and those are not going to take into fact politics. But when we're talking about market sentiment and what's shifting and where to focus on in the market, you do have to factor in a lot of this stuff. I think we could talk a little bit about the China that you guys were just talking about. I think that's one of the big topics we think about in terms of the international markets. I've been on that discussion with you guys in the past saying, hey, I tend to prefer ex-China. I like Japan. I like India. I think they're at the center point of the rotation away from China. I think one of the big topics will be, will the policies, if Trump is, the president, there's some interesting discussion about from his recent speech. My friend Marco Papich, who's now at BCA Research, he was at Clock Tower Group before, he wrote a very interesting thread saying people are not sort of focusing on some of the Trump speech on China, that, hey, the narrative is that he's going to be very, very tough on China, and that he will be, now some of the politics, he started the tariffs and then Biden continued a lot of the tariffs, but Marco pointed out that Trump's sort of a mercantilist in that he's a very business-oriented deal type of guy. And it's possible that actually you come to deals, that they offer him a deal and they start building EV factories in Ohio and he accepts that deal. And so that would be kind of very interesting, because I've been negative on China, thinking that the geopolitical tensions are here. They're going to stay with us for some time. And if that tone shifts, that you actually do come to some deals, that could be one of those positive surprises that you need to see to get China actually back in focus.
Yeah, because you don't think, I'm agreeing with you here, Jeremy, you don't naturally think of Trump, as going to help the Chinese situation, but the deal perspective, and he does willing to do deals. So it's a great point. I mean, so it's not just a slam dunk that China's going to get hammered if Trump gets in.
Right. I think I'm going to be following that story as probably one of my biggest geopolitical stories of, we've been benefiting in Japan. I think, Japan, our Japan funds, our top performing fund, up 30% this year after huge moves last year. India is benefiting in the rotation away from China. I think India's got some great secular forces behind it, demographics, and a very pro-business government that is put in a lot of places. I think makes India really one of the best places for the next few decades beyond for the geopolitics. But, China has been out of favor, and you need something to change to really get the sentiment to shift. And if, could there be a positive surprise on deal making? That's going to be one of the key things I'm watching.
All right, let's go to the great rotation here. It got started in a big way last week. We've had a lot of false starts in this rotation. This IWM move finally clearing that 210 area, got a little bit overdone over 225. Kind of pulling back in here. It's just one of like you see the false starts and then it just kind of comes back down again? Or do you think that the hopes of the 95% chance of an interest rate cut in September here, this is it, folks? This is the turn. This is the time to pile in the small caps.
I mean, it's been a decade-long move, multiple decade-long move of large caps being small caps. Now, you say, what's causing it? We've been trying to look under the hood in terms of the factors that have driven large caps, and certainly the narrative is all the Mag 7 is driving for sure. Like the tech companies are leading, And you say, well, why are they outperforming? Interestingly, the sales growth of the last decade for small caps have been on par with large caps, but you're definitely seeing multiples rise a lot more for large caps over small caps. So small caps have faced a lot of multiple compression, whereas large caps have been growing 4% a year, let's say, for the last decade on multiples. Now, what the narrative also has been small caps are the ones paying the higher rates from the Fed. They've got half their Torsten Stocks out with a note this morning saying half of their debt is floating rate. So you have seen in our work seeing their borrowing costs go up a lot more. And so they really do need the Fed to pivot and to start seeing those rates come down. Now, the earnings environment has been terrible for small caps. If you look at when we have an earnings monitor for small caps, they're declining year over year, double-digit numbers. A lot of the small cap indexes. So, now they're starting to report more large cap is reported, but they're surprising a little bit higher. But you really need to see them starting to grow. Now, as you get into next year, the Mag 7 starts slowing down, and some of these other ex Mag 7 or the other small cap index start to see their better earnings growth. For it to be lasting, you really do need to see the earnings start to perform better. But right now, trading on the Fed and the pivot, and we do think the Fed is pivoting. Now, maybe they don't cut as much as people actually think, and that'll be one of the things you're watching into next year. But the earnings have just not been there, and we need to see that shape up more for that rally to be lasting.
So in terms of earnings, it is, we're getting back into the swing of things of earnings season. Some big companies set to report this week. With the kind of higher valuations that the big tech Mag 7s are trading at, how important are these earnings reports going to be, this quarter and maybe the next one as well?
Well, I've been saying that tech is not in a bubble. That a lot of people say, well, they're dramatically more expensive than everything else, and it's definitely true. 10 to 13 PE points higher than the X Mag 7, but their earnings growth are expected to be double, if around double the non Mag 7 over the next few years. So it's supported by faster earnings growth. Now, if they start to disappoint, that's when you can have a bigger correction. And so it'll be important that they keep delivering. They're expected to slow from some of their past growth rates. But if there's any real cracks, that's when you start to see a slowdown. But, I think their higher multiples are justified by actually delivering the much better earnings growth than the rest of the market.
Before you change, I just want to take it back to the political situation here too. I mean, what we saw, we saw a big Trump pop, then we saw a Trump dump because he said they weren't going to, because he said he was lukewarm to basically protecting Taiwan. Are we back in this situation where tech stocks all of a sudden are Harris stocks and maybe not Trump stocks? Is a political situation, or can we not reach there yet?
Well, and I think some of the rotation will come on tax rates too. I think you say, well, why is the market going up today on this new news? And you say, well, in some ways, Trump's still the predicted market still say Trump is going to win, but maybe the House odds are actually going a little bit more. The odds of a divided, not having a sort of Republican sweep, those odds have actually gone down. Now the question is tax rates. You could think you need the Republicans have all three, the Senate and the House and the presidency, to get the corporate tax rates extended, and small caps, I think, need the tax rates more even than the large caps. Apple has Apple Ireland, where they get lower tax rates by keeping a lot of earnings abroad. The small caps are much more, they don't have all those gains of playing the international markets. And so on a relative basis, I do think the rotation is more important for X-Tech than tech on taxes. And so that'll be one of the key stories to watch is what do you think? Because the Trump corporate tax cuts expire at the end of next year. And so that's what we have to be thinking about for some of those rotations.
Just because I'm seeing such a tech rally here today, and I kind of think, well, Biden dropping out is not the best news for Trump in the world, because I think the markets were pretty much saying Trump was going to beat Biden. Now you bring Harris in, and obviously, maybe it's not as easy of a path. I think Trump is still obviously leading in the polls. Nothing has changed too much, but it's not like he's going against somebody who's having trouble putting words together. I mean, Harris, ex-attorney here, like even to a debate, like people were saying, well, Harris going to win a debate, and I was like, maybe the case, but I just see such a rally here in tech this morning off this. It makes me start to think that, are we starting to get back, linking, that, and we sold off obviously last week with the Trump dump when he said they were lukewarm to protecting Taiwan, but maybe, that was just Trump just shooting off his mouth, and obviously maybe wasn't thinking about that before he said it when made the whole market dump. So that's just why I'm looking here and trying to figure out relationship wise, what's Trump stocks. We were doing this earlier too, Jeremy, before you came on the show. Which stocks are Trump stocks? Which stocks are Harris stocks? And maybe that's where my next question is: can we start like figuring this out here, or is it too early to start figuring out which stocks are Trump stocks and which stocks are Harris stocks?
Well, there's going to always be these micro level stories, and we'll do our work to try to figure out which are the sectors too with you over time. I mean, I do think I tend to focus more on the macro than the micro of the individual stocks, and so I do think the small caps are part of it. That's tied to the Fed, tied to the tax rates. The international markets, the China story is is going to be a big story that we're watching, as we talked about. And as the policies become clear, we'll find some more angles. But I don't have another good example for you at the moment.
Is it time? Just you mentioned it at the top of the show. International. I mean, you've been pounding the table on Japan here for quite some time. With all the uncertainty that we have over here, I mean, the catch-up trade. I mean, we did talk about China, but Japan here, a little bit of a pullback last week. Also, you mentioned India, right? INDE. I mean, it's just is it just a time for that, just maybe just to take the foot off the throttle here and really focus abroad more for, until things are a little bit clearer here, maybe after the election or maybe early into next year?
Well, I do still like the sort of broader participation story in the U.S. I like that everybody's focused on AI, and I do think AI is a real technology. So I do think over time, more people figure out how to benefit from it. It's not just going to be NVIDIA all the time. And so I do think you could stay in the US and get 13 times earnings. You don't have to go abroad to get some of those cheaper markets. The US small caps at 13 times for many of our baskets focused on dividends, quality dividends, are an interesting place to look. But if you do go overseas, I don't think it's everything. I mean, I do think Japan and India stand out as our two favorite countries. I'm not quite overweight Europe at the moment. We like Japan, we like India, and then you'll just see how these other, we'll be waiting for the trigger on China to see if that really does come to be some deal that's not quite as negative as I've been assuming so far.